So who is Warren Buffett? Obviously, most people know. For those who don't know, he's perhaps the most famous American entrepreneur, investor, who's considered one of the most successful in the world. He runs Berkshire Hathaway, a multinational conglomerate based in Omaha, Nebraska. His location in Omaha, Nebraska, has also earned him the nickname the Oracle of Omaha. And that is due to his long-term approach to investing and his ability to pick stock winners that have outperformed the S&P 500 almost every year since 1965. So, like I said, long track record of success. If there's one person you want to emulate and kind of follow his rules for investing, it's Warren Buffett. So his top 5 rules are, first of all, number 1, never lose money. Sounds easier said than done, but at the end of the day, it is what it is. Never lose money. Accounts get blown up making wrong decisions. However, if you follow these rules and principles, eventually, number 1 becomes much less of a risk to lose money making smart investment decisions. Which leads me to number 2. If you don't understand it, don't buy it. Warren Buffett, for him, it's all about, just knowing what company you're investing in based on the products, based on its CEO, based on just overall, if you enjoy the company's products you consume, then that is a name that perhaps you want to look into owning. However, if it's a company which you have no idea what they do, you're not familiar with their business model, you're not familiar with the metrics of the industry, you probably want to stay away from that. So Warren Buffett's been doing that for decades. He's held on to names for about 30, 40, 50 years, some of them, which of course leads on to number 3. Patience is the key to opportunity. Buffett has a famous quote where he compares investing to baseball. And he says that the trick in investing is just to sit there and watch pitch after pitch go by and wait for the right one just in your sweet spot. You got a lot of people yelling at you from the stands, swing already, swing, you bum. You're trying to get some action, maybe swinging at a pitch outside the strike zone. So patience is the key to opportunity. If there's one thing that Buffett, stands out from the rest, is his long-term approach, investing for the long term. And that is number 4. According to Warren, the best way to invest is to buy and hold for the long term. Don't try to time the market, make quick trades based on short-term trends. Obviously the retail day traders, they're in and out of these meme stocks, they're in and out of the tech names. But if you're like Warren Buffett, what you want to do is focus on building a diversified portfolio of quality companies and hold on to them for years. That way you enjoy the power of compounding investments, especially if you own dividend stocks and dividend companies. You get to enjoy those increasing payouts over the years. So with Warren Buffett, number 5, to me personally, that's the quote that perhaps my favorite coming out of Mr. Buffett. I've got it plastered all over my office. Be fearful when others are greedy, and be greedy when others are fearful. That kind of ties into just understanding and sensing the broader market sentiment. We saw, for example, in 2020, almost everybody who started trading was making money. Everybody thought they were the next Buffett. You had names like Cathie Wood's investing in the growth companies. And it just felt like, easy money due to the Fed policies. They were printing and just throwing money at the market. And a lot of the growth stocks and, I wouldn't say junk companies, but a lot of companies who in normal times would not be around, they were thriving throughout 2020, throughout the pandemic. And so that was a time for me, a signal at times, just kind of pull back on risk, kind of cut back, take a step back from the market when other people around were greedy. There's a saying, when your dentist or your gardener starts asking you about stocks, and we saw that with crypto. I can't tell you how many people were asking me about Dogecoin at the time in 2020 and 2021. So that it's a signal that when there's a lot of greed in the market, usually it's a signal that a sell off is coming. Panic will probably come in. While at the other end of the spectrum, be greedy when others are fearful. A lot of people, they don't want to buy the dip. Stocks are going down, a sell off. However, people, I think stocks are probably the only thing which once there's a sale going on, people actually run away from it and sell stocks into the sell off. However, if you'd be shopping at Apple, for example, and there'd be a 5-10% sale on the latest iPhone, people would be lining up to go purchase the latest product. So stocks really, when there's a lot of fear and panic in the market, that's usually a solid opportunity, a solid buy signal to snap up some attractive names at reasonable valuations. So basically, these are Warren Buffett's top 5 rules. Sometimes easier said than done. That baseball comparison really nails it home. You got to just be patient, wait for your opportunities, make smart decisions, and eventually, if you implement these rules, you will become successful as a trader and see your portfolio grow over time. Free gift just for you as a token of appreciation. Proud to offer you guys a one-time coupon with a huge discount code on Investing Pro Plus. There's a free 7-day trial. You can cancel anytime within the trial period. See you next time, and thank you all for joining.